I'm an investor in over 150 startup companies, and the problem I see time and again is that founders don't know how to speak to investors, especially professional venture capitalists. But there's good news. I'm also a VC, and I'm going to teach you how investors think, how to speak to them in their own language, and to increase your chances of getting that investment. The first thing to remember is don't assume they're an expert in whatever your company does. So let's say you're a finance technology company, fintech. Unless you really have information about them, they may be an expert in that field or they may know next to nothing, right? So the first way to do that is to have a crystal clear 30-second pitch at the beginning to educate them on exactly what you do. So you can start to figure out what it is they understand. And by the way, I've got this workbook that's in the description, 30-second pitch playbook, that'll help you understand exactly how easy it is to do. But then the fun starts. Then you get that first question, and you'll be able to tell if you listen really carefully, do they understand what you said? And then what they know about that field. If they ask a really naive question, then you'll realize you got to take the level down and make it really basic. Or they may be a really experienced investor in fintech, in which case you can go ahead and talk shop and do all the fancy nuance talk that's going to make them understand that you understand as much as they do. So don't assume they know everything about your field. Start easy with a 30-second pitch, listen to their questions, and adapt accordingly. The second thing to remember is that VCs always look for patterns. They may not be the smartest people, some aren't. They may not be experts in your field, but the way they work is they think about patterns. They're asking themselves, what other companies that I know have succeeded in trying this or something like this, have failed? Maybe they're ones he's actually invested in. And then they know the heartbreak of trying this space. So they will probably ask you a question. Doesn't X, this other company, also do this? Instead of being defensive and saying, well, they're terrible because they're not really competition and we're better and so forth, treat that as a gift. They are telling you what they are thinking, and you can then treat that as a comparable and a comparison and say, yeah, that company is really good at this approach, but we are fundamentally different because we have this other approach. And then they know where to slot you in the patterns that they already understand. And you're also slipping in how you differentiate yourself, how you can take whatever patterns they like and amplify them. And that's why your company can win. I'm glad you stuck around for this third point because it's so important and one that so many founders miss. You need to understand the motivation of the VC. So people think that VCs are sitting on their own little pile of gold coins, deciding who to give some gold coins to and who not to, but it doesn't work like that. It's not their money. They have their own investors. They're called limited partners in a venture capital fund, and they have to make sometimes just a few investments a year in order to return the capital that their investors have given them. And only then do they participate in the profits from the fund. So they have a lot of pressure on them to pick the very few companies that might return 10 times their money. That's just the way the math of these funds work. So they're under enormous pressure too. And that's why it's really more like a matching algorithm, almost like a dating app, than it is you pitching and them saying yes or no. They are actively looking for investments that can help them make a profit for their fund, the same way that you are looking for investors who can help you build your company. So if you can follow these 3 points, you are way ahead of the game versus other founders who don't know them. Number one, don't assume they're an expert. Number two, know that they understand patterns. And number three, understand their motivation, why they're even talking to you in the first place. That's what's going to differentiate the founder who is kind of clueless when meeting an investor and you.